Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we might have a good morning. Well, not a good morning. I don't want to say like we're going to have like awesome trades or anything, but there is going to be some activity, so it could be good trading. We'll come over here to the charts. Yesterday, the FOMC. So I really thought, hey, FOMC minutes likely to be more hawkish. But the markets actually read that as being dovish. Now, I wouldn't say it was too much. I mean, look, they're still down. But there's a more extensive rally going on here this morning. People are coming in and saying, oh, the Federal Reserve is not. They're actually... So the thing that they pulled out of it was that there were some members that were concerned that the Federal Reserve could make monetary conditions too tight. Okay, so... the problem I have with this overall thesis, come back over here. The problem I have with this overall trade is that people have already kind of been saying that the Fed is going to quote unquote pivot. And since that meeting, the Federal Reserve has come out and put the kibosh on that. So if people are going to make financial conditions easier from here, I think that the Federal Reserve is going to come back and push back against it again, right? Back to the chart. S&P 500 rallying a little bit on that, but I don't know. We'll see. They might be able to recover 4,300. That's going to be the game today. Oil's still kind of languishing down in the below 90 area. Natural gas having another big spike yesterday. Gold and silver. So gold and silver got hammered yesterday, but they actually, in my readings, I was seeing hints of flight to safety flows in gold. That's what, many of the observers were saying was coming into the precious metals was flight to safety, which is kind of, I haven't heard that one in a long time. So that's an interesting development. We're also seeing some movement in copper here this morning. They're moving up pretty good. If I come back over here to Bitcoin and the currencies. Okay. We got Bitcoin got hammered pretty hard yesterday. Back below 2,400. They're just kind of chilling there now. Nothing, in the larger scheme of things, they're just kind of moving sideways. The dollar, though, up almost to 107. Almost to 107 at one point. The dollar continues to be remarkably strong. So that's basically where we're at. Let's come back over here. So here in about a minute, we will get U.S. initial jobless claims, but we're also going to get U.S. Philly Fed Business Index. And do we get the home? Oh, no, that doesn't. Okay, we get U.S. existing home sales at 8 o'clock. That will be a relatively significant data point for the treasuries. But we also have some speakers. Let's see here. They're not being listed on my financial juice. But we have at least FOMC member George speaks at 11:20. ECB Schnabel will be speaking again, I think. ECB Schnabel, inflation concerns we have before July rate hike have not been alleviated and the outlook has not changed. So that's kind of where we're at. So even though this morning the action has been to the upside, we have a setup today where it could flip. So we're gonna have to keep our eyes peeled. We have to keep our eyes peeled. And coming down here through Twitter, seeing if we got anything interesting. Oh my gosh. So, and you hear that there was this guy, he was a student. He invested $27 million in Bed Bath & Beyond as an activist investor and then sold out at 110. Okay, here's the numbers coming through here. Okay, so initial jobless claims was 250K. What is it that we got in Eurozone? No. What am I missing here? Okay. Whoa. Okay, U.S. Philly Fed Business Index 6.2 versus -5. Wowzer. Well, they're still below where they were yesterday, right? They're still below 2.9. I don't think we can play in the 2-year here. I'm gonna leave things deactivated here for now. Dollars moving up. So again, initial jobless claims slightly lower than expected at 250,000 versus an expected 264, and less than the previous week of 262, so that number is good. And US Philly Fed Business Index came in at 6.2 versus an expected -5. Now remember, the New York Fed Index earlier in the week was like really bad. So for the Philly Index to be contradicting that is interesting in and of itself, but it is a positive number when they were expecting a negative number. So all of those numbers overall look good. I'm surprised that they moved as much as they did, though, off of that news, to be honest with you. I did not think that there'd be that much interest in it. Now for this Bed Bath & Beyond thing, total zoo. I was watching it yesterday with the book. I was watching the book yesterday. Total zoo. Can't believe that anybody would want to play that game. There's all sorts of crazy shenanigans going on over there. There's a big offer that's kind of shoving them down here. Again. It seems like it would be unnecessary. Is it normal for no. So, I mean, maybe if you're over leveraged. I've never heard of a broker changing their limits just for the margin requirements just for that, for one piece of news. Never heard of that. No. But, you know, I could see something where, like, you're already kind of over, like, you have a $600 account and you're trying to trade one full contract. You know, the margin is normally 500 and they say, not today. Sure. I have to apologize. I kind of got something stuck in the back of my nasal. Here, it's not coming out. I think this Dota player quote fits Bed Bath & Beyond when the game is going full retard, you can only go with it. If you start going against it, you start going half retard, you're done for. There's a kid that made the money, though. I mean, he was executing large amounts. Like, he owned 6% of it. Like, you got to know what you're doing. You got to know a little bit about execution and stuff to do that, right? So it's really quite impressive. It's like right there at the back, and as I talk, it's kind of loosening up, and it makes me want to gag. I'm sorry. Okay, so we definitely kind of found the hole here down at the bottom. Question is, are they going to continue down for the rest of the day, or are they going to pull back? You have enough to cover the CME requirement, so like you could hold it overnight. Interesting. And what were you trying to do? You were doing U20. Wait, what is U22? I should know what that is. Oh no, U22 is just a month. FVA. I don't know what you're trying to trade there. Oh, that's a 5-year T-note? That's weird. Who's your broker? Yeah. They're talking about Bed Bath & Beyond. Oh, is Trade-O-Vate? Huh. That's weird. Maybe Trade-O-Vate would do that. I don't know. I don't use them, so I don't. I'm using Edge Clear. No problem. I don't know. In a day, I'm going to turn the safety on though. Yeah, they got bought by NinjaTrader. I don't know how that's gonna play out. I've seen some interesting things that I can't really talk about that make me wonder what's going on. Let's just say we'll have some things to discuss in a few weeks. It's funny that it's only on the 5-year. Yeah. I mean, does it do the same thing on the 10? Does it do the same thing to you on the 10? I mean, has it lifted the restriction? Can you do it now? 30-year and Zen are fine. Yeah. So one of the things is that trying to trade these other instruments during a big move is a little questionable, right? The 10-year has so much liquidity, you can get away with it. It could be on member wide position limit, but you would think that I wouldn't think there would be very many people on Tradeovate trading 5-year treasury futures, you know? Yeah. If they have, as a member, their total clients have reached, maybe it could have been on other, you know, the total aggregate of all the instruments, maybe. But if that's the case, then that also kind of makes you wonder what's going on. So we do have a liquidity hole here. I'm not seeing a ton of volume being executed into it, but they are kind of threatening the downside. So it could totally go. I don't know. I mean, if it's really gonna go and we're gonna have a meaningful leg down from here, I'm gonna have to see a lot more volume. I'm also like, the liquidity in the 10-year is just, why it's only 500 lots right now. That's a little. It's been almost 15 minutes since the news. For them to only be putting up 500s now is a little nerve-wracking to me. Even if I thought I had a trade here, I have a hard time putting a trade on with the liquidity being strained, because usually when we're below 1,000 is when it starts to get starts to create problems for me. Yeah, it's super thin. Why is it still super thin? Do they not like the jobless claims number? Or did they get riled from yesterday? Is the market maker still reeling from yesterday? Well, there's the next leg. It was slow at first, but then as it went, the volume did come with it. They're unwinding the position from overnight, essentially. Could maybe see 23 here. It's kind of the next little step down. I'm a little... I mean, I've been feeling this a lot this week, right? Where I feel like I maybe I should be doing something. Like, I kind of want to take a trade. I'm not quite sure what the correct trade here is, but I can't do it. Not with that. Not that liquidity. Not in that liquidity. And like a very clear reason for it to go one direction. I'm not sure I see that slate of news being important enough to outweigh everything else that's been going on this week, you know? There is currently 32,265.7 ETH's worth of NFTs being used as collateral for loans on Bend DAO alone. For the first time ever, a lot of these are at serious peril of liquidation. Wow. It should come off when the RTH starts. Oh, are you talking about the limits? It could be, yeah, I get you. Well, let's just be patient and wait. I don't really see a real reason for the liquidity to be so light. So let's just kind of wait and see what it does. Graham Stefan's been all over the Chinese housing collapse, suggesting that it's way bigger of a problem than people might realize. Jim Iorio. I heard a story about this guy on Twitter who had a really strong opinion on something and was then confronted with incontrovertible evidence to the contrary and then happily changed his mind. Just kidding, that never really happened. Right. Oh, man. You know what? Lately, I haven't seen a whole lot of arguing, like direct arguing. You know what I mean? And even like here on the stream, I don't think it's been many times where it was like, okay, here was an opinion, and then we came in and we showed direct evidence that directly contradicted that. It's like what I see these days more often is more like people kind of talking past each other. Like they're both trying to make different points about the same piece of evidence and emphasizing like different parts of it, right? Can you spend some time showing or helping us focus on the micro barns? Okay, so Mark, what is it that you think you need help on with the micro bonds? Okay, for example, do they follow the USD chart? Okay, so this is a good question. So I'm going to pull my treasury chart over here. I mean, the micro bonds tend to follow the treasuries. There are some differences in the basis and everything, but generally speaking, they follow the treasuries, okay? So what we're seeing here this morning, I'll bring a couple of charts over here, okay? So I've got the 6E and the dollar over here, right? So the 6E is falling off and the dollar is rising, right? The Japanese yen is falling off and the dollar is rising, okay? Now there is a very strong correlation between the Japanese yen and the treasury, okay? The treasury tends to follow the Japanese yen very, very closely. And if you wanted to do some sort of a market making strategy like in the 10-year, it'd be a very good idea to have the the 6E, sorry, 6J up over here to see the 6J moves, do these move, and, you know, possibly arbitraging off of that, okay? Now, the micro yields move opposite to that, right? So this is moving down, this is going to move up, okay? So you totally do see some correlations between that. Now, we're having big news, right? So what's going on here? Well, we got some signs that the economy is stronger than anticipated, right? The jobless claims was less than anticipated and was a move in the right direction. 250,000, that's about average, and it's good for it to be coming down from 264, okay? And we had like the Philly Fed numbers, which were better than expected, okay? So that means more economic strength, okay? So that means Federal Reserve more likely to raise rates. So we see rates move up, we see the treasury prices themselves move down, and we see the currencies move down, okay? So I'm going to be watching for things like, okay, if this moved lower, if we took another leg lower here, it's possible. I think that it would be a little bit too soon for another leg lower, but whatever. If we were to just take another complete dive, does the 6J go with it, right? I would anticipate that it would. But if it doesn't, then that kind of says to me that it's more than just like the macro currency dynamics pushing it, and that it's more of a change in the interest rates themselves, and that for some reason the currency flows aren't following it. That might be something is significant to note, right? So why do we look at correlations? Well, I think the biggest thing is that looking at all of the different correlations gives us a really good idea of two things. One is, where is the money coming from and going to, okay? So right now, money is coming into the dollar. Where is it going? Looks like it's going into the S&P 500. Not entirely sure, but it looks like the money is going into the S&P 500. Okay, so if money is coming out one place We want to know where it's going to come into and try and get ahead of that, right? But then the other side of it is that it gives us a good idea of what the market is actually trading off, right? Because I should be able to come in and say, okay, the market sees this particular data point as being good for the economy. So ergo, I should see treasuries move down, dollar move up, you know, equities maybe go down because the rates are rising, but that correlation is, you know, but that kind of tells me something, right? If the S&P 500 was moving down really hard, then that would be like, oh, they're really concerned about interest rates rising, right? But at the moment, they're not. They seem to be okay with the interest rates, and maybe there's money coming in, but maybe it's just going to happen later. Kind of makes me think that maybe it's just going to happen later, right? But that gives me a good idea of like what is the actual theory that they're going in, and I can look at different instruments to say, does this confirm or deny my thesis, right? Is there a micro to the TNA or ZN? So I don't know what you mean by TNA, but I think you just meant TN. So this is where I'm going to explain something really complicated to you, okay? It's not really complicated, but it's a little bit further than we normally go, okay? The treasuries, the ZN, okay? ZB, ZN, ZF, TN, ZT, okay, are derivatives, okay? So they have delivery, but they are derivatives, okay? And the delivery is, a basket of treasuries, okay? And there's different QSIPs that you can put in. TYA/CN. CQG symbols is TYA. Oh, yeah. Okay. Okay, so there's a basket of treasuries that can be delivered, essentially. So they say, oh, it can be any one of these QSIPs, essentially, right? And those are all QSIPs that were, announced as 10 years or whatever. It could actually even be 30 years from like a really, really long time ago. Okay, but they're bonds with a 10-year maturity left within a certain range, right? And then, but what they say is that the number that we're getting right here is actually based on a theoretical yield that is nowhere close to what the yield is. Okay, so the way that you get the price in ZN is synthetic, you could say, okay? Or rather, if you were to go and look at the price of what this QSIP is trading on the actual bond market, wouldn't be the same number, okay? It'd be different because this has like a theoretical yield and stuff like that, okay? But there's this basket, okay? And there's going to be one security in that basket in particular that will be cheaper for you to deliver. We call it the cheapest to deliver. And that is the one that the price follows. Okay. That's the cheapest to deliver. And the cheapest to deliver could be a little bit out, right? So in the 10-year, that cheapest to deliver is so far out that the 10-year basically ends up being more like a 7-year bond than it is a 10-year bond. That makes sense? The 30-year is more like a 25-year bond than it is a 30-year bond. That's why you got UB and TN. Those are ultra 10s, and they have a much more restricted set of QSIPs that you can deliver, which means that those markets are smaller, essentially. Like there's less actual bonds out there that could potentially be delivered for that market. And the 10-year, they want it to be really big. They want it to be able to handle everything. That's why they have such wide range, right? So then when you come over to the micro treasury yield futures, okay, micro treasury yield futures are different. Micro treasury yield futures are you cannot deliver. There's no delivery. They're cash settled, and they're cash settled based on a index. So there's a broker tech, and broker tech has a limit order book, and they have a method that they use to determine what the benchmark yield price is. And the benchmark yield is run on the run treasury, which is the most recently issued 10-year treasury. So this week or whatever it is, there was a 10-year treasury that was issued, right? At the end of the month, we'll switch over to that one. And that's what the yield that these micro yields will be following. Got with me so far? So that's a whole bunch of stuff. Why does that matter to us? Well, number one, because if you have a bunch of money, you could try doing basis trading between the full cash treasury and the future. And you could sell the future, you could buy the treasury and sell the future, and you could make money off of the basis. It wouldn't be a whole lot, but you can do that. Okay. But the other side, and the thing that's going to be more important to us and those of us that are trading in the micros, is that the yield for this doesn't actually match the yield for this. So you're going to see times where it seems like this really moves down, but this doesn't really move up. It only goes up a teeny tiny little bit. And why is that? Because this is more like a 10-year and this is more like a 7-year, right? So if the 30-year, if you're getting these two are moving strong, then you're going to get the 10-year move. But if it's not, if it's the 5-year that's moving strong and these two aren't moving so strong, you might see the 10-year lag a little bit. And then you're going to want to, if you really want for it to go further, then you're going to want to trade in the 5-year and the 2-year. You notice that there's been a couple of times where I have gone into the 2-year, and that's because I'm expecting the 2-year to move more. Right? That insight was invaluable. Yeah. Now, everything that I told you about how they delivered in the baskets and stuff, that's all in the CME education. That's why I don't talk about it a whole lot. Is because sorry, I forget his name. The head of education over at the CME knows way more about it than I do. Right? Which contract, bond, mini, or micro has deep volume and moves reasonably well? Well, so, I mean, those are kind of two competing metrics, right? The 10-year has the most volume. I don't know why that changed. The 10-year has the most liquidity by far. Okay, you can size up bigger in the ZN. Okay, so the actual functionality of what the symbols contract equate to is educational. I focus on what I can trade and make a living on. Right. Well, that's what I'm kind of saying is, okay, if you really want to make a living off of it, the best way to make a living off of it is already to have a few $1 million and trade the basis. Right. So trying to trade the outrights, there's a lot of uncertainty in it. That's hard. That's really, really, really hard to be consistent with, right? Whereas when you're trading the aberrations between how the contract is actually constructed and the differences that creates in the future versus the actual cash bond, that's something that you can make money on almost every time. Right. The ultra 10-year or the ZN. Well, so the ZN definitely has more liquidity in it. But I've had guys that come in here and they were trading TN and they were doing okay. Probably you're okay with TN. Yeah, treasuries don't have micros. Yeah. The micro yield futures are, I mean, yeah, they are micros of this because you can watch this and make decisions over here based off of this, yes, but there are some pretty significant fundamental differences between them, right? Let me put it this way. If you wanted to trade the micro treasury yield future against the full treasury future and make money off of a basis difference between those two, there's enough differences between the two of them that it would make that a very difficult arbitrage to make money off of, because the fluctuations between them will be a little bit too wild. Depth isn't the focus. Well, the reason why you might want to go to the instrument that has the most liquidity in it is because the more liquidity there is in a market, the more consistent flows that you can potentially predict and take advantage of exist. Okay. Now, when I say a consistent flow, I'm not saying like when it forms a high or low on the thing and yada yada. I'm talking more like, you know, at the end of the month, you tend to see buying in the 10-year. And that's a more reliable trade in the 10-year than it is the 30-year. So what's a reasonable expectation? Oh, man. Well, it changes, right? So it used to be in the 10-year treasury. Used to be in the 10-year treasury that if you got 4 ticks, that was like a standard move. Now, when you come over and you look at the actual chart and you see like the swings here on this chart, that is 6, 6, or 8, 6, 5, 4, 5. So there is still a lot of legs that are 4, but we're also getting legs that are like 12, almost 16. Oh, there's one that was 16. Okay. So, when I used to have a problem when I was more actively trading the 10 years. I really like trading the micros, I have to say. I really like being able to have low risk, you know, and just minimize my risk. But when I was trading the full 10 year, it seemed like any time that I got 10 ticks and I tried to let it go further than that, it was like, oh yeah, I could have taken it off at 12, could have taken it off at 16, but then it would come back almost every single freaking time. It was really, really frustrating. The number of trades that I had where I made 10 ticks and then it came all the way back. And I went through that a lot in one period. Now it seems like we have a 16 tick move almost every day. So volatility changes, right? And you have to adjust with it. Forget everything, just look at UB every day. Yeah, so the micros, so I think maybe I assumed some things over here, right? So this is ZN, ZB, ZF. These ones on the bottom here are the micro treasury yield futures, right? 2, 5, 10, and 30. But just remember that this is actually the 25-year, the 7-year, and the 5-year. So they won't match up against each other exactly. Okay. But on the downside here in the 10-year, what I've found, at least in this market, is that if you make a basis point, so 10 ticks over here in the micro treasury yield futures, that's like your average move. And these days with the volatility, you can get $20 to $50. Once you start getting into like 100 ticks, that's like you got a really good move, right? Yes, my DOMs, the tops are the full size ones and the bottom are the micros. That's correct. Because I'm still watching the order flow in the 10-year to try and see what's going on in the market, even though I'm going to be putting my orders down here in the micro. Right? That comes back to this larger thing that I'm always talking about, which is that past market generated data is not very effective at predicting future market generated data. So it's really difficult for me to come up here and see what's going on here and say the 10-year treasury is going to bounce back up, or the 10-year treasury is going to do a further leg down because of X things, okay? Because of this price movement, and it was a higher low, and the volume, all of these sorts of things that the majority of retail traders look at. Those things just aren't effective at predicting. What's effective at predicting? Well, an ECB, or a Federal Reserve speaker just said something, okay? The economic numbers were this, right? All of these sorts of things, okay? But that doesn't mean that the technicals are useless, right? because the technicals tell me things too. What are the technicals telling me right now? Liquidity is light. I don't know why, but liquidity is light. Okay. Does that affect my decision? It does, right? If I think that the news that we just had is hawkish and should push the treasuries down, but I can see that we already had a strong move and that we are ranging in an area, and I can see the volume going into the area and building out the profile. That's a liquidity hole, right? Those liquidity conditions are not necessarily very conducive to my trade. If I'm going to take a trade, I'm going to wait for that liquidity hole to heal, and for a time when I think I have a better chance of a leg coming in that can give me some trend, right? So the liquidity conditions could certainly invalidate a trade, right? They could also make me want to go in harder on a trade. They could also make me think, oh, okay, like if something happened right now, I think maybe it's a little bit too late, but if like 10, 15 minutes ago, something happened that was like really bad, that was really bad for the economy or something, or that was like cause a flight to safety, I would be more aggressive in this trade because I know that there's going to be a liquidity hole above us, right? So those things, the liquidity conditions, they tell me things, they help my trade. They just don't really end up being the sole basis for a trade, right? This conversation just made attending well worth the effort. Well, thank you. I didn't read your full name. I thought you were somebody else, and I was like, so I was kind of assuming you knew more than about what I tend to say than maybe I did. So the video that you want to watch on my channel is the one that is like the proven stylized behavior of markets, and then there's another one about the inelastic markets hypothesis that kind of prove why we, or kind of the reasons why we take this approach, right? But the vast majority of retail traders fail. Why is that? Well, I think that it's largely because they rely on technical analysis. That's why it's like 95%. Okay, so all of a sudden, for some reason, I just don't feel very good. Might be having one of those things where the food's hitting my stomach and doesn't feel good. Oh yeah, it really don't feel good. Plus it's getting hot in here. Let's pull up the nest here. Do you ever trade the Euro? I don't get the European data, unfortunately. That would cost me more money, so. I'm getting a cold sweat here, guys. Well, I guess I'm not taking a trade today. If I feel like that, then that's usually not a good thing for trading, right? You get intraday margin of 450 on the ZN. It says that it's 69 in here, but I'm breaking out in a cold sweat. So let's talk about margin, okay? So you'll get like intraday margin, okay? Yeah, 450, 500 is common for the 10-year for ZN. That does not mean that if I have a $500 account that I should come in here and trade the 10-year, okay? Now, next step up is there's the overnight margin, the initial maintenance margin, and the, that's what you'd have to hold for overnight. So for the 10-year treasury, that's a lot more. It's something like $2,500, right? $2,500 or something like that to hold it overnight. Okay. So if you have $2,500, then was it worth trading the 10-year? Yeah, you could get away with it. But like, here's another way of thinking about it is, keep your max risk per day to 1%. 2% max risk per day. Okay. So if you only had 500, then you'd only be able to risk $5 a day, which is less than the minimum tick size, right? If I had a $500 account, I could come over here and I could trade the micros, but then if it goes 5 ticks against me, which is pretty much like my average excursion, I'm gonna stop out, right? So if you really want to be like, play it safe, do things correct, I would recommend that you have at least 1,000, if not 1,500 to trade on the micro tenure, right? Now you can be more leveraged than that. It's totally fine. And I think most people do that. You just kind of realize that when you're trading that much leverage, your chances of blowing up are a lot higher. Okay, so you're watching the DOM trading. That's the next level. Average initial trader would use the minute or tick chart. What intervals are effective or common? Yeah, so first of all, I think it's really important to watch the DOM. It's DOM's not the only way to get this kind of information, but I think that the DOM is the most complete because it's only on the DOM where I can look in one spot and see this information from multiple instruments, see how they moved compared to each other, see what the order book looks like in all of them, and see what the volume has been. I do still tend to have like a cumulative delta chart somewhere to see what the volume is doing, if it's buying or selling. Okay, because that's kind of hard to track over long periods of time with the treasury. You can do that with the power meters. You can do that with the power meters. That's a good way to do it too. But I usually just look at the chart. Okay. Why is that? Well, because when you're just looking at price, you're missing half the information, right? Did the price move because there was really strong buying that came through? Or did price move because offers largely got out of the way and just kind of let it move, right? Did it move because a large buyer is coming in and making a play in here? Or is it moving because it was moving in correlation with the currencies, right? These are really important things to determining where things are going to go. And so the reality is, if you're just analyzing price, you just really don't have enough information to really understand what's going on in the market, okay? Now, in terms of a chart, what kind of charts intervals are effective or common? I think it's really up to you, but the most common ones are going to be 1, 5, 30, 60, and then daily charts. Now, like I said, I use charts. I just don't use technical analysis, right? Like what most people do is they come in and they say, oh, look, it's touched this price up here, 29. It's touched it like 4 or 5 times. So I want to sell it here in anticipation of it going to the other side of the range. Well, that works until it doesn't work. The number of times that it's touched there, not enough of an edge on its own for you to make money. I've found. But, you know, you come over here, you might see that there's a large order there that they're shying away from. That hasn't been the case here. In fact, look, they're able to trade up 29,700 contracts, a few more traded beyond that. That just looks to me like they just don't actually want to move. So what I see in this market right now is participants don't really want to participate, and it's ranging in this range probably because of the currencies, right? So what are the chances that the 6J moves here at the moment? I mean, it could move out of its range very easily. So, you know, that technical analysis trade doesn't really make sense in my opinion, right? But I still want to be able to look at the chart and say, oh yeah, okay, I remember now. There was the news, and that made a really big move. We formed a little liquidity haul, and then we had a further move down, and then since then we've just been going sideways and not really doing a whole lot. And I can look at the volume on it too, okay? Pretty big sell here, but there's actually not that much activity in the 10-year here this morning, you know? So the charts are useful. Just don't use them as the basis for your entry. Don't come in and say, I want to go long because we formed a higher low, right? Have a fundamental reason. Have something that's like, it's actually going to cause orders, right? Piece of information that's going to cause other people to take orders, right? And it's not just based on information generated at the exchange, something from outside of the exchange, like an economic report or breaking news or something that a Federal Reserve speaker said, or something that you know about the way the Federal Reserve is likely to act in this particular situation that makes you be able to predict what they're going to do, right? I'm having success with the volume bars. Yeah. Well, so again, you gotta be able to look at the volume. I think that you also want to look at the limit orders, but volume bars are more useful. Renko bars are kind of problematic. Tick bars are interesting, but I used to think, oh, Renko's bars are cool, but I've kind of come to the conclusion that Renko bars are harmful for people more often than not, because they're lying to you, right? I think I'm gonna clear my prints up here above us at 29 just so I can kind of keep track of that a little bit better if we do have a trend back up. Use tick bars. Well, I understand the reasoning behind these other bar types because the markets don't always move consistently according to time, but they do move fairly consistently according to volume, and tick is kind of another way of aggregating it through volume. It's just like X number of transactions, right? Because if you use volume, then you can't say this period had more volume than this period, but you can with ticks, because you can say, okay, well, they're the same number of ticks, but the trades in here were much larger. That's why you use volume chart bars, right? But for me, the main thing that I want to know is just like, did it move up or down? How correlated with the volume was it? Or rather, what I want to see is volume, volatility, right? If I volume, volatility, and trend, I guess. So like if I do put an indicator on there, like I have R squared over here, I have R squared because it's an effective indication of trend, right? When you come over to my volume charts, especially my daily charts, I have average true range with a moving average on it, right? Because I want to know what the volatility recently has been like. I want to see how much it's moving. Now, how much it's moving is really a function of what is the liquidity and what is the market volume. Okay, Fed's Dali is speaking on CNN. But this is moving up. It's contradicting what he just said. I want to take a trade here based on the theory that he will say more hawkish things and might move the 10-year treasury back down. But I still really don't like the liquidity. I really don't like it when liquidity is below, let's say, 900. We're seeing 6 and 7, so it's not right. See, Daly is speaking on CNN right now and is speaking hawkishly, so I bet you the trade will work out, but I really don't like it, guys. So let's say 2.885. That's what we probably could have gotten, or maybe you could still get. They might hit 119. It does kind of look like they want the technical traders certainly would want to let it get back there. So I tell you what, something that I think was I've kind of been noticing, and I was watching the book on stocks yesterday, and it's a really strong behavior over in stocks, but people tend to put their orders at even numbers. Like, you're likely to see more limit orders and more volume overall go through at 119 even than you are at other prices. You just are. And in stocks, it's really strong. Like, you go into Bed Bath and Beyond, every dollar evens point that there's a lot. There's big limit orders there, and they'll kind of come up to those limit orders, but then shy away from them and bounce between them. So, like, it's kind of funny. It seems to me that there is more potential, a technical or statistical edge in even numbers than there are in, like, chart patterns. Does that make sense? There's a larger statistical inefficiency around people placing their orders at round numbers, and that's probably the strongest statistical inefficiency I've seen in the market, aside from what we know about liquidity, of course. Talk to me, Goose. Well, that's got to be from Top Gun, yeah. I never got the opportunity to see the new one because we had a baby around that time, so I still haven't seen it. Spot Gamma tweets that Bed Bath & Beyond looks to be reversing its crash higher as the stock is $20 pre-market versus $23 close. I'd be careful. Like yesterday when I was watching Bed Bath & Beyond, there was some serious selling into that close, man. When they came back, I think that a regular retail trader looking at the chart and everything would say, it's just a pullback. No, like, somebody liquidated hard. Like, through this whole thing. Another thing that I saw in watching Bed Bath & Beyond was that when it moved up, you weren't actually seeing a strong imbalance in the market orders. So it would go up, but like the number of people selling it was equal to the number of people buying it when it did move up, which says to me that there are a lot of limit orders there, right? Like, there are a lot of people selling it to you, and the people that are buying Bed Bath & Beyond right now are going to be bag holders, I think. I don't think that it's going to stay up where it is for very long, because there's too many big boys in that, and when they take their profits, it's gonna smack it down hard. Val, good morning. How are you? Welcome back. Bed's Dolly, the raise and hold strategy does pay off. I think so. Based on what I've heard from the Federal Reserve lately, they're likely to raise rates to 3% and then just keep it there. Evens hit. Oh yeah, they did touch it, but only briefly. What I'm seeing right now in the Treasury is there does appear to be a meta order buy going through here that's being quite gentle about it and careful about how much they can put in. But that doesn't say like it's a strong one. I don't know if you could really like confidently try and follow that, you know what I mean? You scalped it and made some off of it? Oh, not a bad trade. Especially if you're just going to the previous liquidity hole. Although I don't think that this was just like a return to the liquidity hole at 118.30. It does look like there's somebody buying in here. Actually, one of the things that I see at the moment is the order flow kind of suggests that somebody is putting a flattener on in the treasuries, but they're not really getting paid for it yet. I'm reading through news sites here, see if there's any additional headlines. I wouldn't expect it. Market's been pretty quiet. Lira crashes after Turkish central bank makes shock rate cut despite raging hyperinflation. Okay. Dali says that doesn't think that we're in self-fulfilling prophecy mode for the markets have a lack of understanding, but consumers understand that rates won't go down right after they go up. They raise and hold strategy pays off. A hump-shaped path for rates is not what's on my mind. If you look at how consumers are spending and getting jobs in large numbers, I don't think we are in a self-fulfilling prophecy mode for a recession. I don't know. I don't believe the jobs numbers. That last jobs number, I don't believe it in one bit. Let's see where we're at on that, 2 months time. Like after the October jobs numbers, let's see where we're at, and that might be interesting. Sam Harris just admitted that he supported censoring the Hunter Biden laptop story because it helped Joe Biden, says tweets Jack Posibiec. I forget, who's Sam Harris again? Podcast host. I guess I don't really know him. Guess he's a philosopher of sorts. They're holding that 30 half there okay. They seem to be having a hard time getting back to that 119 even, but I do think they're probably going to get there. Oh look, there's that. We haven't seen this daily spam in a while, have we? Fed's Dally, the Fed is committed to bringing the economy back to a sustainable path. Global financial conditions are tightening, and we have to keep that in mind. Now she's repeating the sentiment that we saw in the FOMC minutes. Slowing global economy will push down on U.S. growth. We do not want to overdo policy and find we've tightened the economy more than necessary. Trading floor audio making fun of Dali 50 or 75 is reasonable for September. The markets have a lack of understanding, but consumers understand that rates won't go down right after they go up. They raise and hold strategy does pay off. Hump-shaped path for rates is not what's on my mind. Don't want an unforced error or need to balance doing enough with not doing too much. That could mean further upside here, to be honest with you. Liquidity is still... Ugh. Okay, they just ended the interview. At the top of the hour, we've got some existing home sales numbers and CB leading index. Now, CB leading index is a change in a level of a composite based on 10 economic indicators, and it tends to have a muted impact because most of the indicators used in the calculation are released previously. Faith Focus Finance, hello, how are you? That's a new name. How are you doing? We got about 30 minutes to the top of the hour. I'm still a little bit perplexed as to why the liquidity in the 10-year is so light today. Really doesn't. Somebody must have lost a bundle of money yesterday somehow. They are trading into 119 a little bit better there. Well, since that little spike to 119, things have kind of slowed, you know. They've slowed a little bit. It was slow before, but now it's really slow. S&P 500 has opened up, right? And the initial move, at least so far, has been a sell, but it hasn't moved much in price yet. I wonder if that means that the S&P 500 is going to chop around a lot like it has been the last week. Not really go any one direction. Taking a trader funding evaluation and had one wild day in crude. There's no liquidity to say the least. So does that mean that you made money on that day? I hope so, because that's your best, you know, having a really good day. That's one of your best opportunities to pass the funded trader evaluations. $200. So that must have been in micros, right? Micro oils and made $200. It's not bad. But don't you have to make like $1,500 to $3,000 for most of the trader evaluations? Oh man, they really jumped there now. Where were we at when I said they might continue further, but I'm not going to take it? Was it at 2.88? After being down 1,200. Oh, you've got a bigger one. If you're doing, I'm really not a fan of the trader evaluations, but if you're doing a trader evaluation, you got to realize that they are actually quite aggressive targets. And so if you really want to pass them in a reasonable time, you do have to be aggressive and take risks, right? Are those DOMs filtered for volume size or just standard? Yeah, they're just standard. The market is just that quiet right now. But look, they moved up pretty good there. I do see a correlated spike in the Japanese yen, but it looks to me like this is largely trading on the treasuries. So it seems to me that they sat and listened to what Fed's Dally had to say in her CNN interview. And then afterwards they said, oh, okay, this is dovish, and they bought it. So how far this can actually go will be very, very difficult to sort. Because I'm not seeing excessive volume come through on it, right? It's not doing the thing that would like put strain on liquidity and create a liquidity hole that would create a little stop for us. It's just kind of slipping up. And I think that we could continue to see a slip to the high of the day, although there are some 900s forming at 04 and 04.5. I think they are somewhat a scam. I like it because they have skin in the game versus a demo. Yeah, but the thing that really turned me against the funded trader programs was when we started getting micro ES and now micro treasuries. You can trade a very, very small account and have skin in the game, right? And that money will get you a lot further. So, do I think they could go further from here? I do. Although, I do kind of would rather see a pullback first. The thing is that I didn't expect Dally to say anything like out of line with anything that they said before. But what I did think was that the Federal Reserve might try and push back against the narrative yesterday that we don't want to go too far. And her not doing that kind of says to me that maybe the Federal Reserve is okay with where the markets are at the moment. So that seems to be something that could continue pushing us up, but I'm just not sure how strong. Commissions are a little high. I'm not holding one. Yeah. I trade micro treasuries and I'm really love it. I think they're a great instrument. 2.86 was the last point that I was saying, like, okay. Now I've got 2855. Another thing that could be happening is there could be some other people that were similar to me thinking that the Federal Reserve would come back out and be more hawkish. And when she didn't, they're bailing on their trade. That could be another thing that's going on here. But so far, I'm not seeing panic or anything like that. The volume's not all that strong. It's just liquidity is really light, and it was just a very consistent move. The drought is forcing ranchers in Texas and across the southern plains to make an agonizing decision. Sell now and for less money than they planned on, or hold on and pray for rain and risk losing everything. Ooh. 850. This is moving a little bit faster than I thought it would. But I'm still... Well, okay, so now we're going to getting into some bigger orders like the 08. It may well be that after 08 that we start to see like more significant amounts of volume and maybe the market thickens up a little bit. No, I guess I'm going to pull back. Back to 05. Okay. Man. Well, that right there is exactly why I don't want to take a trade in this liquidity, man. Slippery. I think the Fed was neutral, says Val. Well, I think you're right, but I think here's what I think is going on, Val. I think that the Federal Reserve feels like that they're on track to get interest rates to where they wanted, and that the market was able to handle it, and they're pretty happy with it. But I also think that the Federal Reserve is going to want to keep rates at that in that place for a long time. So, like, when I look at the macroeconomic environment, in the past 10 years, it was a very deflationary environment because of aging population. Now we have the deglobalization from forces coming from Russia and China, and that is an inflationary force. So we kind of come to this point where, yeah, we can't have the monetary policy that we had in the past, but that doesn't necessarily mean that like inflation is going to continue like spiking out crazy. And like, again, they always point out that their biggest concern is what if inflation expectations become unanchored, right? And so far, it doesn't seem like that's happening. So if that's not happening, then we should get to a point where our monetary policy is appropriate and we can just keep rates where they are. In other words, we kind of in some respects it is like the last 10 years. It's just that instead of holding it at 0% for years and years and years and years, we might be holding it at 3% for years and years and years and years. Now the Federal Reserve isn't going that far, but the Federal Reserve is saying that, hey, you know, we're not gonna be reducing rates in 2023, or at least right now we don't expect to be reducing rates in 2023. The market is pricing that they will, although we kind of have some questions about that. That might be a pricing aberration caused by the switch from Eurodollar to SOFR, right? So with all that said, it is kind of neutral, isn't it? It is. I think I might have finally cleared the thing that was bothering me. Now to 04. The thing though on that one is I didn't see the liquidity hole or anything like that. The volume just petered out. So perhaps what we might be seeing here is speculators taking trades, saying, well, okay, that's dovish, after she was done speaking, and then backing off and taking their profits. Well, we do have some news at the top of the hour that might give us some more direction, but at the moment I'm just not seeing a strong enough of a flow or liquidity conditions for me to justify a trade, even though it would have been a pretty good trade if we had taken it like 2.88. Would have been a good one. Drought is echoing through meat supply chains, resulting in higher prices for consumers for at least the next 2 years, and likely serving as the final blow to many small family-run cattle herds that represent a key part of the industry. I like to be positive, but these days you don't get many positive headlines. Taking the fifth should disqualify a politician from taking office. Okay. So let me tell you why this kind of action bothers me, okay? Because I know that some of you guys did make money on that, right? Don't you ever get tired of the grind? It feels like everything in society these days is geared towards getting you to grind, right? You get on TikTok or YouTube or wherever it is, and there's all these people saying to you, I made $1 million too, and you can too. All you have to do is be a hard worker like me. So then you go and you turn in and you do whatever the thing that they said to do. Maybe you buy their course or whatever, and you grind and you grind and you grind and nothing happens. What the heck is going on? Well, I'll tell you what's going on. We're having a gold rush, right? We're having a gold rush, and these guys are people selling you shovels, saying, hey, everybody else is down at the quarry digging in this giant hole. Why don't you go join them, right? The problem is that they've already dug all of the gold out of that hole. You're looking in a place that's already been mined out, right? If you want to have success, and I mean the kind of success that makes people millionaires and things like that, it generally involves you innovating in some form. It involves you finding an edge, something that the markets didn't see before, right? It's like saying, well, I think that hole is all mined out of gold, but I actually think that there's this area close by where I can mine platinum, right? Nobody's looking for the platinum, but the platinum is actually more valuable, right? That's the sort of thing that you got to do. You got to innovate. It's the same thing in trading, right? The trade that everybody's seeing, that everybody's reacting, that's hard to make money on that trade because you already got all these people that got in and they're going to be taking profits against you, and it can come back very quickly. I think that trade there, it was a good runner, but it came back very, very quickly, right? And why is, I think that it's mostly just people following each other. The liquidity is still really poor, so it doesn't take very much for it to move. And the change in volume is like really tepid and slow. A very slow amount of volume, market volume coming through the markets. So was that actually like a big change in the markets that like surprised people? And no, it was just people following each other. That's what I think about that move. Trading is not following. Seems like the majority of people that come into the trading space, they think that trading is just following other people. It's not. It's not at all. Following other people just makes the person that you're following money. Well, there was a 1600 lot at 04. That's like the biggest amount of volume that we've seen trade anywhere. I don't know if that's really enough to make it do anything. There is a little bit of a bounce here, so if we wanted to go long the treasury, this would be a great spot to do it. I'm wondering if we might get an ascending triangle here. But the other thing that I'm seeing is steepening. I am seeing steepening, particularly on the seems like it's more coming from the 30-year end of the curve. The 30-year is lagging behind the 10 and the 5 a little bit. Shall we change the music over to lo-fi? I think so, yes. Because I like the drum and bass one, but it's too short of a playlist. Oh, by the way, what is the dollar? Okay, so gold here did move up as the treasuries moved up here, but it pulled back quite a bit, and it's not as extensive of a move as I would maybe have been looking for if I was long gold. So Let's see here. Let's come to this chart here. Soybeans down 0.72%, the biggest loser on the day, followed by corn. Biggest winners here today, oil up 3% and copper up 1.5%, then followed by the treasuries. S&P 500 is just down 0.25%. Not really doing a whole lot here. And I take it you guys must be the same. You know what? This is like a big holiday week, right? Like my kids start school next week. So I think Jackson Hole is next week, right? So we shouldn't be surprised to see markets be a little lackadaisical here, right? Well, I said if you wanted to go long, here's not a bad spot, but that already is kind of turning out to be no good. It's probably anywhere between 119.01 and 04 is probably okay, but probably the closer to 01 you get, the better, obviously. But if we're just gonna plow back here to 119 even. FX Street News tweets, Euro USD price analysis says a test of 1.01 and below remains on the table. Well, the dollar sure is looking strong here this morning, isn't it? Up at 106.86. I need to probably reset things. Not much to say here until we get the housing numbers at the top of the hour. I really hate songs that have sounds like that in it. Ray Dalio, I used to think that the upper level you needed to fight with the lower level you to gain control. But over time I've learned that this is more effective to train that subconscious emotional you the same way you would teach a child to behave the way you would like him or her to behave, with loving kindness and persistence so that the right habits are acquired. How do you guys deal with fees and commissions? Those are killing me. Well, so if I'm trading here with micro treasury yield futures, the commissions aren't really a huge deal, but the data fees definitely are. And generally what happens is if I'm trading on one contract, I will make the commissions, I will make the data fees up, but that's about it, right? So yeah, it is a problem. How do you solve that problem? You need to be trading a large enough wad of cash that the data fees are an insignificant factor, or have other sources of income that you're redirecting into your trading. But it's a part of the game. If you're not paying a commission, then I should be suspicious about how effective if there was a lot of money in it and everything, then they would be charging you a commission. Okay. But I tell you what, like, if you're coming in, it's a lot of the time we'll sit down and we'll say, oh yeah, I'd totally be making money if not for the commissions. But like, that's by design. That really just says that your trading is random and that you're getting lucky. Okay. If you really truly have edge, the commissions themselves aren't going to be a significant factor. The $1 or whatever, the one tick that you give up is not likely to be a big factor if you truly have an edge. Man, the spoos really are quite the choppy play today. Shall we check in on the meme stocks? That's kind of the funny thing is that the market is kind of being a little bit slow and lackadaisical here, at least the treasury market is. But I'm sure that if we come over here to Bed Bath & Beyond, that it's still a zoo. Yeah, housing is coming. BBBY. I was actually not moving that much this morning, Bed Bath & Beyond. Pretty big decline overnight. Lots of people bailing overnight. And Janet Yellen eyes $80 billion boost as a monumental opportunity to transform the IRS. Oh boy. I do wonder how they're going to change the IRS with all that money. I really is kind of like, that's a lot. What are they going to do with all of that? Maybe they could make a more effective filing system. Because the whole thing that, of course, that you can't like file directly, they would like to make it so that they did it all, but the tax companies don't want to let them do that, right? But like, if I want to check on the status of my return, for instance, like the computer systems that they have there at the IRS suck. They could fix that. That would be cool. I just found this channel. When you just start trading, what's a good minimum amount to realistically start with? So I think that if I'm going to come in and trade the micro treasury yield futures, that, well, not for anything, if you really want to be consistent, you want to trade for a long time. Because here's the thing, you can leverage up. It's just that you might blow up and lose your account really quickly. And it takes a long time to learn trading, right? So I would recommend minimizing your risk. And so if you can get yourself to where a bad day, like your max allowed loss on a day is 1% of your portfolio, that's optimal. Now, the vast majority of people aren't going to hit that. So the vast majority of people are going to be over leveraged. But hey, if you come in here to the micro treasury yield futures and you trade $1,000 account, okay, and you lose $20 on a day, that's 2%. Okay, so if you come in with $1,000 in micro treasury yield futures, I think that would be a great start. And you can trade that amount as long as you maintain your risk and everything and don't start sizing up crazy and things like that. You can trade on that for a long time. You can trade on that for years. Because again, the whole thing here is that trading is very hard to figure out, right? Markets are very statistically efficient, but they're not very informationally efficient. So it's really, really hard to find a technical efficiency, almost impossible. But like sorting out the informational inefficiency, that takes a long time to learn. Okay, here we're going to get the housing starts. Okay, lower than forecast, it sounds like 4.81 versus 4.87. So not a huge divergence from the expectations. Change is negative 5.9% versus an expected negative 4.89, and higher than previous months, or more negative than previous months, negative 5.4. CB leading index change is negative 0.4 versus the expected negative 0.5. So now that that is out of the way, it doesn't look like that provides any catalyst for us, but we may see some things move here. S&P 500 may be hinting at a sell here. Can you see yourself in the future with this as you mean? No. Listen, I have to say, the idea of subsisting purely on trading profits for your living sounds like a complete nightmare to me. Okay, if I had $2 million packed away and I could live off of that on fixed income, then I could see myself coming in here and saying, oh, okay, and then I just trade, and that's the only thing that I do. But I wouldn't really be living just off of the trading profits at that point, would I? Nah, like if that's your only source of income, that's really stressful, man. It's really stressful. And I have found that when I really size down and took minimum risk here on the micro treasury yield futures, I've done a lot better. It's a lot easier for me to just sit here and be like, well, I don't really like the liquidity conditions, so I don't have to trade it. Even though, you know, we were kind of saying, I don't think that I picked a good spot. I think it would have been 03, but we said, hey, you could buy anywhere in here if you think it's going to go higher. We might be getting an ascending triangle sort of thing. It looks like that is coming to fruition, but I didn't trade it because I don't like the liquidity. It's a little bit better now here after the news, but I'm still seeing some 7s. So, you know, no trade for me today, but you know, because the amounts that I'm trading are small anyways, it's not a big deal to me, right? It's way easier to keep myself in line. I mean, the other thing that really helps is really only trading when you know you have edge. And I don't mean like some statistical aberration that has held in the past. I mean something that there's a real reason that's going to cause people to buy or sell in the future, and you can get it ahead of them, right? If you really know that the thing that you have is likely to have edge, or that's the way that you're trading it, you don't have to play these mind games with yourself, right? You can just know, you get into the trade, and then if it's not going, if the flows don't come that you're expecting to see, then you just get out, and that's all there is to it. And all you have to focus on is being in your best. Wasn't very good yesterday. Today I do feel like I'm on. Today I feel like I'm more disciplined, even though no trades, of course. But, you know, I got good night's rest. I feel like I'm speaking well, right? I did have a period there where I kind of felt a little nauseous. I don't know what was with that, but that passed. I think it was just the food hitting my stomach and stuff, right? You have that, you know, I can just focus on what do I need to do to get my body and mind in a state where it will perform the best. I was only able to do that because I didn't have to worry about all of these other things, you know? And then the other thing was that, streaming is a little bit of pressure, right? Streaming is a lot of bit of pressure. But when I sized down, it was like, I don't owe anybody anything. I was able to trade more freely now. And I caught some big winners too. I mean, that kind of helped too. Okay, so I finally caught the big winners that I always kind of wanted to catch. Now that I got those, I could just kind of relax, you know? Listen, I know, again, everybody's looking for other sources of income these days. I understand it, okay? Like, I'm pretty comfortable financially, but the thing that kind of sucks is that inflation took away from the money that I was saving away. So I'm not able to save as much money per month now because of inflation. I hate it. It really sucks, right? I know if I'm in that position, I make more than most people. So I know that a lot of people are kind of hurting, right? And then you look at day trading and it's like, this is, oh yeah, like you can really make some serious money doing this. And this would be a way for me to escape from the grind. Because I get it. The grind sucks. I said this earlier. You go on TikTok, they say, here, do this thing, buy my course. You can make this content. Everybody on TikTok is making content to try and provide you value to get followers, right? What's going on? We're digging for gold in the same hole. Everybody's digging for gold in the same hole, and they're telling you just got to grind harder and you'll find it. No. If you're really looking to make better income, there's two ways to do this, okay? Number one is increase your skills, okay? Now you can increase your skills in day trading. It's really hard to capitalize on that, right? Probably the best bang for your buck in that space is programming. Oh man, it's so easy to make money programming these days, guys. And you can go and you can take like these online courses that are free online courses. If you really dedicate yourself and you're doing it full time for a month, you'll learn to code, and you can go and you can get, depending on where you live, $70,000 to $100,000 a year jobs, just like that. Boom. Within a month, you could go and you could make that change, right? So one is upping your skills in an area that there is demand, right? Number two is you got to innovate, right? So if you're going to make money in trading, you have to innovate, really. You got to come in here and do something that other people aren't doing, and find an edge in the market that like other people aren't finding. Everyone wants to come in and just follow everybody else and say, I'm just going to grind harder. Well, it doesn't work like that. You have to, the market is very efficient. Those edges, they're already taken out. You have to find new edge. You have to innovate, right? Those are the two ways to do it. Stop grinding. Go get smarter. Huh? Work smarter, not harder. I build trading robots. They all make money until you factor in the commissions. Then it's a slow grind for the best ones, and the rest just lose. Yeah. Gee, I gotta tell you, man. The market is very statistically efficient. So if you're looking to make money, if you don't make enough money per year and you want to make several tens of $1,000s more money per year, okay, trading is probably the worst place to try and find it. Okay, trading is for people that just love markets and we're obsessed. That's really what it's about. I mean, somebody has to do it. Okay, somebody has to do what we're doing. There actually is a lot of informational inefficiency in the market, and we need more people to come in here and try and keep markets attached to something, you know, at least somewhat reminiscent of actual value. Okay, there's just not enough people trading it, but the reward for it is, you know, it has a really big fat tail distribution. The vast majority of people that aren't going to make anything from it, and the few people that are really successful at it are going to make millions and millions of dollars, right? And the people that make those millions and millions of dollars, they're going to put a lot of effort into it. So the amount of money, the amount of effort that you put into trading, it's just not a very good reward, right? It's only going to be worth it for you if you just really absolutely love it. And you've got to be that. And it's not just like you love charts, because I think there's a lot of people that say, oh yeah, looking at a chart, that's fun. Like, everybody loves doing that, actually. You think that like not very many people love to do that, but that is like what humans do, guys. Okay, 100 years or you know, 500 years ago or whatever, that's what people would do. It's just that instead of looking at charts, they were looking at animal tracks, and they were looking at the rain, and they were trying to, the human mind does that. That's what it's built to do. Okay. But I mean, like, you actually enjoy the market. Like, you actually enjoy coming in and listening to a Federal Reserve speaker say things and comment on the economy and trying to guess what that means for interest rates, right? That's what I mean. Like, that's what then trading is for you. And you just got to realize that you're doing it because you really enjoy it, right? Now, if you're looking for so if that's you and you're looking for an inefficiency, where do you dig, right? Okay, so we are going to dig for gold. I don't want to dig where everybody else dug. Okay, where does everybody else dig? Technical analysis. Every piece of empirical study that we've ever had on technical analysis says that it doesn't work. Okay, I wonder why. I think that there might have been a time where it was effective, like at the turn of the century, back in like the 1900s. But now we have these computers, and any kind of inefficiencies that actually existed like that in the market just get taken out of the market. And it doesn't take very much money to take those out either. Like, that's the crazy thing, is that your orders have a much stronger impact on the market than you think. So searching for technical inefficiency, like you're talking about, GWE, it's hard. And what you're going to find is, if you're really smart and you're doing it really well, you come out and it's like, yeah, you'll make money, but then after the commissions, it's not so great. After the costs, it's not so great, right? It's a lot easier to find the informational inefficiency, to say, okay, what was that piece of news? What is the sentiment like? You're taking all of these factors and you're utilizing information from outside of the market to make predictions about what the future orders will be. There's a lot more edge available for you in that. And in that world, there's really, it's so much, it's just literally freaking everywhere. It's just that those kind of signals might be, it's always going to be different, so it's hard to be consistent with it, which is the advantage with the technical side, right? Is the technical side, you can just do that thing, you can be consistent about it, right? Okay. Now, if you're a programmer and you still say, hey, I really do want to program though, because that's where my skills are, right? Then the recommendation that I would make to you is that at this point, I think that to be competitive in the algorithmic arena, you probably have to be incorporating machine learning to some degree. Because I did the same thing, and I actually did find some really interesting things in the order flow. But like, what I continually found was that like the tools that I had were inadequate for it. So one thing is, dig where other people aren't digging. So like, if you're going to do a TA, if you're going to do a robot, maybe make that robot look for order flow instead of price, because everybody's looking at price, but not as many people are looking at the book and looking for a statistical aberration in the book, right? But then these big guys, these big corporations, I mean, they have these really sophisticated computer systems, and it just seems to me that at this point it's very difficult to be competitive without incorporating the machine learning. So if you don't have machine learning, I would start learning Python and learning how the machine learning stuff works. And hey, you know what? If you go into that, you're probably going to find that there's some pretty good jobs out there in involving machine learning these days. Now, the downside of that is that you're probably going to have to build a lot of infrastructure yourself, right? That's where I'm at right now. I don't have nearly enough time, as much time as I'd like, to build the infrastructure. But learn to code what? The coding field seems very vast to me. Okay, so here's how you answer this question, actually. Well, I mean, one way is just to say, what kind of thing do I want to make? What kind of thing do I think I would enjoy making? But there's actually a different way. StackOverflow.com is a website where you've probably been there before, where people ask technical questions and get answers. But they also do a survey every year. Survey. Stack Overflow Developers Survey 2022. There we go. That's the most latest one. Okay. Accept all cookies. And then I'm going to skip over here to the technology side. Top paying technologies. Okay. So right now, if you want to make the money, the languages that are paying the most are Clojure and Erlang, which is kind of weird. Oh, you're working on a PhD in machine learning and neural networks. Okay. Well, hey, maybe you can help me. But so GWE, what platform is your stuff on? What platform is your stuff on? It's funny that Scala and Perl are up there. Scala is kind of like an iteration on Java. It was like Java didn't do some of the things that we wanted, so we got Scala. A lot of these languages up here at the top, though, are kind of like ones that aren't very common, and so that's probably why they pay so much. But Go is up there. Go and Rust are probably the ones that I would love to go for. But the other way that you can go, I do C#, by the way. That's interesting that the average is 69,000, because that's I live in an area of the country where it's low, and even here in Utah, I think that most of our developers get paid more than 70. Trying to build something with both real world and scientific value. Yeah, F#, who even uses that? I don't know. The other thing is web frameworks. So there's a lot of web programming. You can do okay with web programming. I learned React. There was a while ago, React was the thing, and then I guess everybody learned it because it's come down. It's come down now lately. Some of these other ones, I don't. Gatsby, Dino, I'm not familiar with those platforms. Co-location still pays a lot. That's interesting that AWS pays more than Azure, and that pays more than Google Cloud. I wonder why that is. This is kind of more the world where I am. I'm site reliability engineer, so a lot of what we're doing is building infrastructure on Azure. Anyways, but there's other ways to look at it. Like, let's see here. I think, that's the change between years. Now, there's another way to look at it. Where is it? There's one that's usually like a scatter plot. There's one that's often a scatter plot. Tools, IDE. Oh, what did they say for IDEs? Oh, interconnection. That's not what I don't care about that. Loved versus dreaded. So this is actually an interesting thing. Is like, okay, let's not care about how much we get paid. Let's just look for the things that people want to use. Loved versus dreaded. NeoVim, followed closely by Visual Studio Code. I've been doing Visual Studio Code. I'm kind of wondering if I should try NeoVim next. Those are IDEs. That's funny. Rad Studio. I'm not familiar with that one. And then Vim. I've been trying to up my Vim skills this week. I've been working really hard. Well, not super hard. I wish I had more time to work on it, but I have been working on it. Frameworks and libraries. Hugging Face Transformers. What the? Okay, but then we come into languages somewhere up here, right? Databases. Languages. The most loved, Rust. Now, the issue with Rust is that Rust is complicated. What is Sierra written in? Sierra is written in C++. So here's the thing. There's C++, and C++ is a great language, but it's an old language. And the problem is that because of the way that the language was developed, there, anybody could come in and like use their own version of C++ essentially, right? So you had to create like a consortium to make standards, right? And the consortium that does the standards in C++ just moves slow as tar and is like a pain to work with and things like that. It really sucks in that respect. And so people just said, okay, fine, we'll just make a new language. So there's two big ones right now. Well, let me say three big ones, because there's Golang.
Although Golang wasn't really developed to deal necessarily so much with desktop applications. I mean, it does it okay, but really Golang was really built more for backend code. Google uses it for backend code. And then there's Rust, which has been around for a while, and Rust has kind of become the one where everybody's like, oh yeah, like Rust is put together really well. We really like the way that one is doing. So if you want to do like really high-end efficient programming where you're managing the memory yourself and doing all of everything from scratch, it's Rust, right? So like I said, C++ is what Sierra Charts is written in. If I ever get to the point where I'm making enough money that I can or I could find funding to make my own platform and I could build machine learning stuff into it, I would build it in Rust. I think I would build it in Rust with like a Python attachment. That's what I want to make. Rust. It's cool. Anyways, but now there's another one that's coming up that's called Carbon. And Carbon is another Google project. And Carbon is attempting to do many of the same things as Rust, but they're trying to make their code interoperable with C++, which is to say that you should be able to take code in C++ and convert it over to Carbon very easily. Now, Carbon isn't out yet. It's supposed to come out before the end of the year, though. But that might be a big deal. It may be the case that everybody that was doing C++ moves over to Carbon. But then at that point, that might give Rust a little bit more room to kind of come out and become a thing. Anyways, what is the professional? Maybe it's the professional developers part? Productivity impacts. I remember there was this thing that was like years of experience and that technology that you were using and how much you got paid. It was like a scatter plot. But maybe that was last year's survey. So yeah, if you want to get into programming, you don't know which one to do, you can look through here. You can find a local code camp and see what they're teaching. Because like, here's the thing, especially if like some people, because hey, I'm not bashing on any of it, but a lot of the people that come through and want to get into trading their kids and they're not even making 50, they're making below the median wage, right? Okay, if you're making below the median wage, it literally doesn't matter what you learn, you're gonna get paid more for programming than 50K. What's the best way to learn C++? Oh man, I'm sure that there are some online courses. Like again, there are like free courses. I forget what there's like an online free code camp. Let's see what they got. Online free code camp. It's not just called free code camp, is it? It's not. Free code camp course offerings by Forbes Advisor. Ah, there you go. Do the MIT OpenCourseWare on C++. That's probably a good choice. Oh, it is freecodecamp.com is the one that I was thinking of. Earn certifications in all of these things. It's free. Trending guides, C versus C++. There's definitely something in here. There's courses for free that you can do in here. A lot of these are just individual articles or guides, I guess. How to learn the C++ programming language by Farhane Hussein Chowdhury. What kind of a name is Chowdhury? Is that a British name? That's quite a name. I never heard that name before. There you go. Talks about C++.
The thing with C++ is you have to manage memory, and there's some complexities around managing memory sometimes. But that's what's cool about Rust, is that Rust has created all of these extra tools to help you do that and ensure that you don't create memory leaks. So, yeah. Well, I never got a response from GUI, but what I've been doing, GUI, is I've been exporting my order flow data for the ZN out of NinjaTrader into a comma separated value file, a new file for each day. And what I will do is that then I will create transformers that transform these things into time-based columns that I could pass into a machine learning model, essentially. Right? I wanted to keep the raw data so that I, if I want to change the way that those major features work, I can always go back and change them. So it'd be flexible. But basically doing that. And that will, I think, be the start. And then at some point in the future, I will, switch off of NinjaTrader and get the data directly through my own thing. And my own thing that would be able to read the results out of the model a little bit more efficiently. Because with NinjaTrader, I have to use a socket, which is really freaking annoying. Chowdhury in Indian. Well, this is the thing, is like most of the time, a lot of those courses are Indians. I was watching this stand-up comedian, and he was saying that being an engineer in India is like peer pressure. The peer pressure in India is to become an engineer, which I was like, what? I think that it's really is just the case that most of the Indians that come over to the United States, it's because of technology. I heard a joke that you can tell when a C++ dev learned based on the pointer that they use. Oh, geez. You know what? Like, pointer syntax for C++ was always confusing to me. I always had a hard time understanding and differentiating when I should be using the arrow versus when I should be using the point. But it wasn't so much that as it was like headers and stuff. Like headers in C++ is that all that stuff is like, that's the part where it's like antiquated. And I'm like, why do we need that crap? It's like you're writing the same piece of code twice. That's annoying AF. Yeah. The funny thing is that I don't write that much code these days. I write more code on my own for the NinjaTrader indicators than I do at work usually. What I'm doing at work is usually writing configuration files for the cloud, which in some respects ends up being a more complicated thing, but in some respects it's not. I think that designing an algorithm and managing the difference between like the memory and the processor usage and understanding how your algorithm affects the performance, that's real computer science stuff. That's real sophisticated computer science stuff that most people don't ever get into, or they'll learn, but they don't use a whole lot in their job, right? But what's hard about what I do is like, how do you make it so that like everybody else can use it and it makes sense to them and it's sustainable and it's easy to update and you can, all of the little pieces fit together. That's hard. Takes a lot of work, and there's a lot of, okay, make a configuration change. Oh, that doesn't work the way that they say that it should, and like lots of little commits here and there and trial and error and stuff. That's frustrating. Got disconnected. I tried the same thing you did on NT8, but found the data. Okay, so when you say you exported the data, though, what exactly were you exporting? So when I say I'm exporting the data, what I'm saying is like anytime that the on market depth, every time that the on market depth function is called, I just pass out the data that's getting passed into that, right? So I'm not like saying, okay, here's what cumulative delta is and calculating cumulative delta and then exporting that. I'm literally just exporting the things that come into the on-market data and on-market depth events. Now you say that you found the data to be inaccurate. If that's the part that you're passing out and it's inaccurate, it's not because of NinjaTrader, right? It's because of the data platform that you're using. But there is this whole thing about how in sync are your matches and your market depth feeds, which is where, to really truly be accurate, you'd want market by order data, which is expensive. But another way of saying that is that it doesn't seem to me that Continuum is incredibly accurate with that stuff. I don't know if Rhythmic is better, but I'm using Rhythmic and kind of using a little hack by just using a regular version of NinjaTrader to get it through NinjaTrader and Rhythmic. And then I can move over to using Rhythmic API to get the data and connect directly to Rhythmic API. That's the way to do it, right? No, I think he's saying something different, actually. What he's saying is that at the moment, Jigsaw does not have any way to interface with it directly. There's no custom coding or anything like that. They made a mention in a blog post that they can make it so that you have more customization ability on the charts. And so I think that it will come to the point sometime in the future where you might be able to do that. But really, for the sort of thing that you and I are trying to do, you probably ultimately want to connect to the data platform yourself directly. So really what you'd want to be, the thing that you'd want to be looking for is a data platform that allows API access, like Rhythmic API. Rhythmic MBO data is good. Denali is a little bit better. Yeah, I'm trying to get as much as possible with as little as possible. Got an extra job just to buy Jigsaw. Well, I could show you, if you message me on Discord, I could send you my data exporter. That might make a little bit more sense, because I suspect that what you were saying is like, okay, so I'll export cumulative delta or something like that. There's some problems with that, but data quality is an issue either way, though. Like I said, so I've been reading this book. Where it's outside. Been reading a book about data engineering. And, you know, I was planning on taking this approach anyways, but the more that I read this book, the more convinced I am that this is the right way to do it. Is like store the data in the most raw form that you can. And yeah, that's not going to be suitable for your machine learning algorithms to consume. So transform the data and then save the transformed forms. And then if you ever want to change the transformations, you still have the ability to go back and pull them out and regenerate it. So that's what I'm doing. But for now, I'm just saving the data. I have like a week or two of data so far. It's a relatively recent thing. So that's why I'm saying, like, if you message me, what I might be able to give you, I don't know how I would transfer them to you though, because they're like 200 megabyte files. But I would totally pass you the data that I saved. And you can tell me what's wrong with it. Raw, volume, ASCII volume. Yeah, okay. Well, so then you could see if Rhythmic is any better. Although my question would be, what did you see in there that said to you that the data was not accurate, that the data was inaccurate? Or maybe it's just that you compared it from what you were getting with Continuum to what you were getting in Sierra Charts, and Sierra Charts seemed more accurate. But then how did you know that what Sierra Charts was saying was more accurate, right? I don't know. But I think that we're going to come into, I think that we might be coming into a world where this might become a bigger issue. So one of the things that I'm seeing happening is, so like if you come in here into the micros, okay, and there's like this huge divide here, right? So if I want to like buy at 3%, like if I want to bid and I don't want to bid at 3.011, so I bid at 3. Sometimes you put a bid out there and it immediately gets hit, right? As soon as you put it in there, some algorithm sees it and hits it, okay? So it comes through almost immediately. And the way that the algorithms work is, okay, the best bid is 3. We saw an order at 3, so the market order at 3, so that market order must have been a sell, right? But what if you see that order at 3 and the level 2 update that says that there's an order at 3 hasn't come yet, right? Then what it's really going to say is like, it's a 3 that's above the best bid, so maybe it's a market buy instead of a market sell, right? It could miscategorize it. So somebody did this study that said, you know, on stocks, this is a really big issue. So can we use some other information about like what the last tick was and where if it's closer to, you know, the bid or the ask side in relation to like what the middle is, you know? So like we split this in the middle, and if it's up here, it's more likely to be, you know, a buy, and if it's down here, it's more likely to be a sell, sort of a thing. And they have some Python pseudocode, and then they had data like from the exchange so that they could like verify that it was correct. And they found that that method of doing things was much more accurate. So I don't think that any of the futures platforms have that stuff built into their algorithms, but it's already to the point where it might matter here in the micros. It's just not enough people are using it. And like, real market depth data on the NASDAQ is like available now, or it like they have it. Of course, you have to find a data platform to give it to you and everything like that. But like it's there, it's coming. So that might become a bigger issue. And at that point, I'm hoping that they will improve their data a little bit. One of the possible explanations I found online is that actually everything is accurate, but my problem with data are dark pools. Spoofing is an issue for sure. So if you were incorporating machine learning into them, what machine learning models were you using? So I saw somebody, there's a model created by Google called TabNet that is specifically for tabular data. And I really want to try passing order flow data into that. Man, it's still only 8:39. We've only been talking about this for 10 minutes. It seems like it's been forever. That means they were really, really engaged in this, right? Or at least that I was. I must say though, I do like the rhythmic data better than what I was getting from Continuum. Now maybe the CQG data is better. Some people love the CQG data, but Continuum itself seems like it's a little, yeah. Like the frustrating thing about it though, man, is that like I'm going to build out this whole infrastructure and I'm going to make these machine learning models. Okay, LSTM. Okay, I get you. I get you. I know what that is, but I don't remember what it stands for. Long short-term memory. I was looking more towards the deep neural network kind of route. LSTM is not a deep neural network, is it? I don't think it is. Most cited network. Yeah. I really hidden Markov models is one I'm pretty sure. I'm positively convinced. I don't think that discovering this would be a huge edge in the market, but it sure would be like something that's like, oh, why did I not see that there all the time? I'm pretty sure that there is a hidden Markov model involving the imbalance between the cumulative bid and ask depth and the way that the market volume is going and the overall trend for the day. I think that there is a hidden Markov model between all of that, because I've seen situations where it moves up and there's more offers up there, and I've seen situations where it moves up and there's less offers up there. That is when you're adding like the nearest 10 levels, right? And it seems to be consistent. Like it'll be like that for a few days, and then like there'll be a shift in the market and it'll be the other way for a few days. So it seems like there's a Markov model involved with it. Now in the short term, it's like if there's less liquidity in a location, it'll go towards it. It'll fall into it. Tried HMC. It's HMC. Oh, Hamiltonian Monte Carlo inference for Bayesian. Yeah, like so like as soon as I get into the Bayesian stuff, that's when I don't think that Bayesian models really work very well in trading, because or not that I'm saying that I've done a lot of that myself per se, but just from my reading, it seems to me that these kind of Bayesian probabilistic models have problems because of the market's fat tails. You get what I mean? Oh, it's a hidden Markov chain. Oh, okay. But you didn't find an edge in it. See, I would think though, like, was it like there was no edge, like it was just random, or was it like there was no edge, it just got you break even? Because if it just got you break even, I think that would be a significant enough development that I would be writing up an indicator and I would be using that to filter out some trades, you know? But this TabNet, so here was the study that got me interested in TabNet. This guy was looking at silver on the Shanghai exchange, and on the Shanghai exchange they report open interest every 5 minutes. So they had open interest data, and they combined the open interest data with, you know, what the market orders that they were seeing in the market to determine if those order flows were people opening or closing positions. And then, you know, that information they passed on to the machine learning algorithm that was TabNet. And over the 9-month period that he tested it through, it resulted in significant profits. And it was a really good Sharpe ratio too. For something that was basically trading intraday, I was really impressed with it. And I actually found the guy and messaged him. And he said that the majority of the edge that was being derived, because he had technical indicators in it too. He said that the majority of the edge was coming from the open interest data, because TabNet is explainable. So you can look at what features are resulting most in the results. So that was really interesting. And the thing is that he was taking it on like a very basic level, and he wasn't incorporating market depth at all. So that's where I'm like, seems to me that if you get a method like this and you get a good enough model of the markets that incorporates that into a machine learning, you might stand a chance at finding something. And then definitely if you can find alternative data sources to give you like biases for sentiment, then I think you might be talking about a robot that might do really well, you know? Yeah, open interest is OP. If you could have it in real time, you'd be making money 100%. I don't think that you'd be making money 100% of the time, but it would be a lot easier, right? Because it would, if you could see the open interest real time, it would probably, there's probably a lot of trades that you would be like, oh, I don't want to be involved in that one, right? Oh, that's just somebody closing out a trade and it's over, right? Versus, oh, somebody's opening a trade, I want to front run this, and you know why it is. But I think still to make money, you really have to have a good prediction of like something that predicts money. So like when you look at the hedge funds, these quantitative hedge funds, how are they making money? Okay, well, there are the high frequency trading firms. Okay, they got to understand that one, a lot of the high frequency trading firms, the strategies that they're doing have really fat tails to them, right? There's going to be 1 year where Citadel loses a ton of money. I don't think that Citadel would go under, but there's going to be a year where Citadel gets hammered, okay? Another factor is that a lot of what they're doing is price discrepancies in options, which is a huge area of things, and so you can gain edge out of it that way, right? But when you look at like the hedge funds, and they're like an algorithmic hedge funds, but they're not high frequency hedge funds, what they're doing mostly from what I've done, from what I've seen in my research, is they'll go and they'll pay somebody for order flow. And I mean like real order flow, not like the stuff that anybody can just go and look at the market and record. I mean like you pay Goldman Sachs for all of their order flow to see who is executing when and stuff, right? And then they can search that for patterns, and then they can go in and they can say, oh, okay, this there's an S&P 500 firm that rebalances in this way on the last day of the month. And so they can always predict that flow and have a pretty good idea of what it's going to be, and they can front run it, right? Or they'll find statistics. So those are kind of more like swing trades in some respects, right? And that's where a lot of that comes from. So that's why I'm saying that, like, especially if you can factor something into your machine learning model that is like alternative data that's outside of just what we can collect from the exchange, that's when I think you're going to find something that's really useful, right? So the things that I'm interested in doing the machine learning on, that would be all market data, right? So I don't expect that I will make money purely off of that. And if it does make money, it's probably not likely to be very much, right? But what does interest me about it is that it might give me some signals to say, oh yeah, actually, this is not a good place to try and do something right now. It might help me refine the timing and placement of my trades, right? Might give me an idea of when I should be more aggressive, that sort of a thing. That's what interests me about it, is it could be a really useful tool for a discretionary trader to do all of this stuff for you that, you know, the algorithm is good at, that you can't process that much information, right? And then you can just focus on the part that actually is the edge, right? Have the robot take care of the timing and location. Have you found the bots have invalidated the advantage of level 2 data? Many have, and Just save their money, purchase level 1 data service. Well, so like what level 1 and level 2 means is kind of, it means different things for stocks, right? Is market depth is not the edge that it used to be. It's not. There was a time 10 years ago where if you had access to the market depth and you were trading here, you could derive significant edge from it, yes. And a lot of that was market making strategies. Is you can see temporary arbitrage opportunities and areas to catch the edge and all of that sort of a thing, right? Market depth. I'm not gonna say that it's like useless. Okay, like kind of what happens is you'll have a piece of information that provides an advantage, and then the market starts, you know, eating away that advantage. And one of two things will happen is either one, it will still be an advantage, but it's just you won't be fast enough, which is what happens in order flow. It is still straight up an advantage. It's just none of us are fast enough. You need to be at the front of the queue to do it. Like, if think about it like this, if I was at the front of the queue every time and I was only looking for one tick, are there situations where I have a really, really high chance of getting that one tick? Yes, there are. Right? But the other thing that will happen is they'll just arbitrage away the edge, and so, you know, price will move up or whatever. And so you can't really take advantage of it. But that doesn't mean that like it's a disadvantage at that point. It actually kind of turns into a, you don't want to trade against it. If you trade with it, you just break even, but you don't want to trade against it, right? So that's what I like to call base. It's what I like to call base. It doesn't provide edge, but it's base. And there's all sorts of things that I would say are base that they help you, but you still need an alpha generating edge somewhere else, right? Yang Zhang, but I forget who it was, dude. I'll have to go look. I have it saved on here. So the whole point of that is, yeah, I don't think that you can come in and just learn to read the order book and trade profitably off of that. It might be possible to do in some of these micro contracts. Might be possible. But are you going to trade the 10-year treasury like that? Probably not. Too much competition. Right? But you can use that information to your advantage, and if you have something else that does provide an advantage, right? That's why I'm saying, like, again, especially because of the robots. I mean, it's just the way that the market is in general, but especially because of the robots. Markets are very statistically efficient, but they're not very informationally efficient. So, and the robots, there's a lot of things about informational inefficiencies that the robots just aren't very good at doing. So there's still places where humans can make money, and it's like all over the place. It's just kind of knowing when to play them and when not to, right? I think I did a good job here today because, like, we did have a big move after Fed's Dali was speaking, right? But after it touched the high there, and I was like, no, I don't want to touch this because look, the liquidity is still really light and it's not taking very much to move it. So really it's just moving like this because nobody wants to trade it. And there's just a few speculators after Dali. And what do you know? Since then, it's just kind of been choppy and sideways. So I have the experience to know. Yeah, that's probably not the best trade for me. Even though Fed's Dali's speech could have been, a buy opportunity in the treasuries for sure. It would have had to have been a quick in and out, right? Okay, so I think I put it in my machine learning folder. No, it's not this one. I don't know where it is. I mean, it was a simple study from a student. It wasn't like a huge thing. It was a Chinese fellow. Probably shouldn't tell him your name because you guys will all just go and bother him. You get the best results on ZB because of the difference between the tick value and commissions 31.25 versus 33.2. Yeah. So you know what I've found I've done a lot of indicator soup, right? So, and especially on the bonds, you know, so it was a lot of, okay, let's try all of the different types of moving averages and let's combine it together with these things. And then I tried combining it together with cumulative delta and stuff. I've kind of found that doing things historically with tick replay is not very accurate, so you don't want to do that way. So some of my order flow based back tests were probably not very useful or accurate. But what I always found was that if I had a strategy that seemed like it was going okay, and there often were times where like it worked, but it was just like over too small of a data set, like it works over the last 2 years but it doesn't work over the last 5 years, or there's a fat tail to it, and that this sort of a thing, right? I always found that it worked better on ZB than on ZN. It just seems that for whatever reason, maybe just because the book is so thick in ZN and everybody is watching the order flow over there, but ZB just seems to be more technical. It reacts to technical strategies better. Another thing that I found is that the S&P 500 is really effing random. Like the variance in the returns that I would get from the S&P 500 is almost always higher unless I'm doing something where I just like have this huge stop. Like there's just a lot of noise in the S&P 500. So that's why I think all of the technical analysis that when I was doing ZN and ZB, I always thought that I had something. But when I started trying to test them on ES, it was kind of like, what's the point? None of this stuff ever works. It's just everything that I get is just the results are random. Every time the results are random. It's because the ES is random. The edge there, it is random. There's probably isn't very much technical edge you can pull out of the S&P 500. I'm getting the feeling your bots are just entering and liquidating after one tick. Well, it wouldn't even be that. Like, think about it, actually. If, like, let's say that your strategy was 50-50. Let's say that you won 50% of the time, right? And you were making 2 ticks when you did win, right? And if the commissions were equal to 1 tick, then that would be break even, right? But then when you add on top of that, like, okay, probably you don't win greater than 50% of the time. If you have something that has like equal risk reward and you're winning more than 50% of the time, I'd more than 55% of the time, let's say, to give ourselves a little buffer, I'd really like to see it because I've never been able to find one of those. How do you make a 4 square web pages on one monitor? What do you mean by that? You just open up. That doesn't make any sense to me at all. You just come over to your web browser, you open up 4 tabs, and you pull them out into different windows, and then you put them next to each other like squares. And if you're really, what is the word? Obsessive compulsive about it, there are tools that kind of help you put them into grids. There's There's a Power Toys tool that will arrange things into a grid correctly for you, for instance. They trade for an hour and then close? When you say they trade for an hour, does that mean it's like it's turned on for an hour and it can take trades and then it closes? Or does that mean like that your average holding time is an hour? Grid tool is what I was looking for. Yeah, Power Tools has a thing in it. Hopefully that's what you use. Search Power Toys and tools, and then it found that for you. There we go. I wonder sometimes, like, you know, here on the YouTube channel, of course, there are certain things that I just don't want to do. Like, I'm never going to come in and say, you're gonna make millions of dollars, that's why you should come and watch this channel, or put numbers as clickbait to get people to watch the channel. I don't want to do that. But what would be the things that would be the most useful, and like, what is the content that people would be the most interested in? It seems to me that when it comes to like, you know, programming and the computer hardware and all of that sort of thing, that's the thing that like people are the most interested in, trust me, on the most, for whatever reason. I wish that it was market microstructure, but the reality is nobody's searching for market microstructure, right? Apparently nobody's searching for the Federal Reserve too, because everybody on the internet just hates the Federal Reserve. All trades last for 1 hour, no stop or loss. Oh, well, that could do it for you too, yeah. Oh man, I'm from Morocco. Hey, one of our most longtime regulars here is from Morocco. There's a lot of restrictions for you trading in Morocco. Okay, following you on YouTube just last month, and I've started to learn how to read with jigs on the DOM. I love it. I keep learning how to scalp with the DOM. That's good. I'm glad that you find it, that you're getting value out of it. Yeah, so so here's something that I would do, Jiwi, that's kind of interesting that a lot of people don't think to do. Because again, markets have fat tails, right? So when we think of fat tails, usually we just think like, okay, so like there's individual trades and how much do you make on one individual trade and what does the distribution of that look like? You couldn't do that. But what you could also do is you could also say, back tested over 10 years, and what is like the distribution of daily or weekly returns, right? Because what you're almost always going to find on something like that is like some sort of a tail, right? If you don't have a tail, you might want to come in there and say, oh, okay, well, what if I limit my loss here and always let the winners just go as far as they want, right? And then that might change your distribution. That might get you something more like this, where 0 is here. It might get you something like this, where the left tail is just really, really long. Like flat, but really, really long, right? And then all you got to do is, at that point, okay, like kurtosis and everything, it's a real problem, okay? But something that I think I might give a misleading impression to people about is that, like, if there's that kurtosis and the overall thing is not work, then it's a bad trade. No, that just means that you need a way of managing the fat tail. Okay, hey, I got to get going and realize it's 9:05, so I will see you guys later. In the meantime, stay profitable, friend.